Your gold just crashed by 21%. Your silver lost 41%. And while that was happening, while your screen was bleeding red and the media was screaming about a bubble bursting, the People's Republic of China was quietly executing a $634 billion move that almost nobody has connected yet. I found the trail. Every single dollar of it. It is exposed, it is documented, and it is sitting right there in the U.S. Treasury filings if you know where to look. But the reason you haven't heard about this on CNBC, the reason Bloomberg isn't running front page stories on it, is because this money didn't just move. It vanished. It went dark. It entered what intelligence agencies call a ghost protocol. By the end of this video, you are going to see exactly where that money went, what China is building with it, and what it means for the future price of every single ounce you own. Once you see the full picture, you cannot unsee it. Welcome to the hidden economy. If this is your first time here, this is where I break down what mainstream financial media will not show you. If this analysis helps you, like the video and subscribe. It helps the algorithm show this video to more people who need to wake up. We need to start with a mystery that is mathematically impossible to ignore. Imagine if tomorrow the entire GDP of Sweden just disappeared from the global banking system. No press release, no panic, just gone. That is effectively what happened. Over the last few years, China has dumped $634 billion worth of U.S. Treasury bonds. They went from being the number one creditor of the United States to number 3 behind Japan and the UK. Now, money does not evaporate. Energy does not disappear. It changes form. When a nation sells $600 billion of the world's reserve assets, it must buy something else. They have to. You cannot just hold cash in a vacuum. So where is it? If you look at the official gold reserves of the People's Bank of China, they claim they have only bought a few hundred tons. The math does not add up. A few hundred tons is a rounding error compared to $600 billion. The official narrative is a lie. The money has been laundered, not in the criminal sense, but in the sovereign sense. China is engaging in sovereign asset laundering to convert paper debt into physical power without alerting the market, without triggering a price spike, and without tipping its hand to Washington. This is not random. It is the most coordinated financial strategy any nation has executed in modern history. I call it the 7-piece strategy. It is not a list of news items. It is a game of Weiqi, what we call Go. In Weiqi, you do not attack the opponent directly. You surround them. You place stones on the board that seem unconnected, random, even confusing, until the final move connects them all and the opponent realizes they have been strangled. The United States dollar is the opponent, and China has just placed 7 stones on the board that surround it completely. Let's look at the first stone, the first piece of the strategy, the dump. This is the overt move, the public move, selling the treasuries. Why do this publicly? Because it serves a dual purpose. Financially, it frees up capital. But psychologically, it signals a lack of confidence. It creates noise. When China sells treasuries, yields go up, U.S. mortgage rates go up, and the American economy feels the pinch. It is a form of economic warfare that looks like portfolio management. But the genius is that while everyone is focused on the selling, nobody is tracking the buying. They are selling an asset that can be frozen like Russia's was and moving into assets that cannot be sanctioned. But they can't just buy gold on the open market with that money, or the price would go to $10,000 overnight. That leads us to the second piece. And this is where the ghost protocol begins. The proxy. This is how you hide $600 billion. China does not buy gold directly through the People's Bank of China for the majority of its acquisitions. Instead, they use proxies. These are state-owned commercial banks, sovereign wealth funds, and private entities that are effectively controlled by the CCP. They route these purchases through the over-the-counter markets in London and Switzerland. When a sovereign wealth fund buys gold in London, it does not have to be reported to the IMF as official reserves. It sits on the balance sheet of a commercial bank. It is technically private gold, but make no mistake, if Beijing makes a phone call, that gold belongs to the state. This is how they have absorbed thousands of tons of metal without the price reflecting it. They are using a network of shadow buyers to drain the West vaults while keeping the official numbers boringly low. Then comes the third piece. the one that hit your portfolio last week, the smoke screen. This is the silver export control. On January 1st, China restricted the export of silver. Why? The mainstream media says it's because they need it for solar panels. That is true, but it is only half the truth. In warfare, you use smoke to blind the enemy. By locking down the silver market, China creates volatility. They create chaos. They force the price to disconnect from reality. When the West is screaming about a silver shortage and prices are crashing because of paper manipulation, who is the ultimate beneficiary? The buyer who wants to accumulate physical metal cheaply. The export bans are a feint. They're designed to hoard the strategic resource while making the rest of the world panic. It creates a fog of war where nobody knows the true supply, and in that fog, China operates unseen. Now, we move to the fourth piece, and this is the most dangerous one for the US dollar. I call it the digital tunnel. This is SIPS Enbridge. Think of the global financial system like a highway. The US dollar system, SWIFT, is a massive superhighway. It is efficient, but it has toll booths and cameras everywhere. The United States sits in the control room watching every car. If they don't like you, they shut off your engine. That is what happened to Russia. China knows it cannot move $600 billion on that highway without being stopped. So they dug a tunnel. SIPS is the cross-border interbank payment system. It is an underground tunnel that bypasses the US highway entirely. While you are watching the charts bleed red on Friday, 4,900 banks across 124 countries were moving money through this tunnel. But it gets deeper. Enbridge is a project connecting the central banks of China, Thailand, Hong Kong, the UAE, and crucially Saudi Arabia. This is a direct digital link. No dollars, no SWIFT, no American eyes. When China buys oil from Saudi Arabia, or when it buys gold from the UAE, the money flows through this digital tunnel instantly. It is invisible to Western sanctions. That $600 billion didn't disappear, it just went underground. It flowed through SIPS to buy commodities, resources, and hard assets in jurisdictions where the US has no visibility. The fifth piece is the silent accumulation. Did you know that China is the largest gold producer in the world? They mine more gold than Australia, more than Russia, more than the United States. But here is the statistic that matters. They do not export it. Zero. Strictly forbidden. Every single ounce of gold mined in China stays in China. That is roughly 300 to 400 tons a year, every year, for decades. This domestic production is almost never counted in their official reserve updates. It enters a black hole. It goes into the state vaults, into the Army's reserves, into the unknown. Over the last 20 years, this domestic mining alone accounts for thousands of tons of ghost gold that officially does not exist. They are not just buying the world's gold, they are hoarding their own production like a dragon sleeping on a pile of treasure, all while telling the world they only have a modest amount. Piece number 6 is the most brilliant use of soft power I have ever seen. The debt trap swap. This is how you buy gold without spending money. China has lent hundreds of billions of dollars to developing nations in Africa and South America through the Belt and Road Initiative. Many of these countries, Ghana, Sudan, Zimbabwe, are rich in resources but poor in cash. They cannot pay back the loans. So what does China do? They don't ask for dollars. They accept resources. They accept gold. They accept mining rights. They are swapping bad debt for hard assets. It is a masterstroke. They lent paper money that they printed out of thin air, and in return, they are getting physical gold, lithium, and cobalt directly from the ground. This gold never hits the open market. It goes from the mine in Africa onto a Chinese plane, directly to Beijing. It bypasses the London fix. It bypasses the COMEX. It bypasses the price discovery mechanism entirely. It is off book, off radar, and massive. And finally, the seventh piece, the sleeper reserve. This is the deception. The art of war is based on deception. Sun Tzu said, when you are strong, appear weak. China officially reports gold reserves of around 2,200 tons. That is the weak appearance. That number is a fabrication designed to keep the West complacent. If they admitted they held 20,000 or 30,000 tons, the West would wake up, the U.S. would mobilize, gold would be remonetized instantly. By keeping the official number low, they lull the dollar system into a false sense of security. They let the Wall Street banks short gold. They let the price crash. They let the Western investors sell their silver, because every day the deception holds is another day they can buy at a discount. Now, I want to use an analogy to help you understand the scale of what is happening, because numbers like billions and tons can become abstract. I want you to visualize a marathon, but this is not a normal race. This is a race for survival. Imagine the United States and Europe as a runner who has already finished the race. They are sitting at the finish line eating a buffet. Western central banks hold between 60% and 70% of their national reserves in gold. They are full. They are saturated. They don't need to eat anymore. They are complacent. Now look at China. China is a giant, the second largest economy on earth, the manufacturing engine of the world. But in terms of gold reserves, this giant is starving. Officially, gold makes up only 8.5% of their reserves. Think about that difference. 66% versus 8.5%. To just catch up to the average of global powers, to reach even 20% or 30% like Russia, China doesn't just need to buy a little bit. They need to buy everything. They are like a giant at a buffet who has only eaten one cracker. To get full, they need to consume the entire buffet. This is the marathon analogy. China has run the first mile of a 26-mile marathon. The $634 billion they moved, that was just the warm-up. That was just the water station at mile 1. This is what makes the crash so terrifying and so bullish at the same time. If China were full of gold, if it had 60% reserves, then a price crash might mean the bull market is over. It might mean demand is dead. But because they are at 8.5%, because they are starving, a price crash is not the end. It is a gift. Think about the pool and the cup. The $634 billion they moved is a massive amount of money to you and me. But poured into the empty pool of Chinese reserves, it barely covers the bottom. The capacity for them to buy more is effectively infinite. They have trade surpluses, they have a printing press, and they have a mandate to de-dollarize. The pool is empty, and they are standing there with a fire hose. So why hide it? This is the question everyone asks. If they are buying so much, why not announce it? Why not strut around like a peacock and crash the dollar today? Because of the price. It is simple economics. If you are a whale, if you are Warren Buffett, and you want to buy a company, you do not go on TV and say, I am buying this company. If you do that, the stock price triples and you lose money. You buy quietly. You buy through shell companies. You buy on dark pools. You suppress the price if you can. China's doing the same thing on a geopolitical scale. They are the whale. If they announced the true extent of the Ghost Protocol, if they showed the world the receipts for the debt swaps and the proxy buys, gold would be at $5,000 an hour later. Silver would be at $200. That sounds great for us holders, right? But it is terrible for the buyer. China wants gold at $4,400. They want silver at $72. They want it lower. They love the crash. When Kevin Warsh raises margins and the paper price collapses, glasses are clinking in Beijing, because it means they can exchange their dying dollars for hard assets at a 20% discount compared to last week. They are playing a game of accumulation, not speculation. Speculators want the price up today so they can sell for fiat profit. Accumulators want the price down today so they can buy more physical weight. China is an accumulator. You are a speculator. That is why you are panicking, and they are celebrating. They are using the 7-piece strategy to build a fortress brick by brick, while the rest of the world is arguing about the price of the drapes. They are converting the exorbitant privilege of the US dollar into the exorbitant reality of physical gold. And this brings us to the conclusion. And I want to speak directly to you now. I want to speak to the part of you that is scared, the part of you that saw your net worth drop last week and thought about selling. You are looking at a distorted picture. You are looking at a chart that is being painted by paper leverage, by margin hikes, and by a geopolitical adversary that is actively trying to suppress the price. You are looking at the price tag, but you are missing the value. The crash you just witnessed was not a market rejection of gold. It was a clearance sale for the People's Bank of China. Every ounce you panic sold on Friday didn't disappear. It moved. It moved from your weak hands into their strong hands. It moved from a retail account in Ohio to a state vault in Shanghai. This is the greatest wealth transfer of our time. But it is not a transfer from the poor to the rich in the traditional sense. It is a transfer from the impatient to the patient, from the blind to the visionary, from the paper believers to the asset holders. Don't let them shake you out. Don't let the volatility blind you to the ghost protocol. The reason the price is volatile is that the stakes are existential. If this were just a pet rock, nobody would care. But because it is the exit ramp from the dollar system, the fight is vicious. Imagine a ship leaving the port of Shanghai. It is a massive cargo ship, heavy, sitting low in the water. It is loaded with the future. It is loaded with the gold that used to back the American dream. It is loaded with the silver that is needed to build the green energy revolution. And it is sailing away. You are standing on the dock holding a handful of paper dollars, and you are watching the ship leave. You can scream at the captain. You can scream about the price. You can scream about the unfairness of the margin hikes. But the ship is leaving. The question is not, will the price recover? The question is, will you be on the ship or will you be left on the dock? China has made its choice. They have moved $634 billion. They have activated the 7 pieces. They are playing for the next century. Are you playing for the next century? Or are you playing for next week? If you sell now, you are validating their strategy. You are giving them exactly what they want. You are subsidizing the rise of the next superpower with your own losses. Do not be the casualty of this war. Be the witness. Be the survivor. Hold the line, because when the ghost protocol is finally declassified, when the true numbers are finally revealed, the price will not matter anymore. The only thing that will matter is wait. Stay hidden, stay watching, and I will see you in the next video.